Traders, how you doing? Tom with Tom Willard Trading. Let's get to it. We've got some great updates here for you with regards to swing trades on the coming week. Today is September 20th. It's a Sunday. I am sending this out. I'll be booking it to the YouTube channel here on the 20th, and then it'll pertain to swing trading ideas for this coming week, the 21st to the 25th, and possibly the week after. As these swing trades typically take some time to set up, depending on what I'm talking about here. So first off, let's talk about the spiders, S&P 500. You'll see the daily chart upper left, weekly chart upper right, 60-minute, 15-minute, and the lower right. So it's basically the highest time frame, weekly to daily to the left, then the 60-minute and the 15. And this is really what I look at with regards to swing trades. These are the time frames I look at, driving it off the weekly and daily charts. So what have we got going on here? Well, we topped out and we pulled back. And you'll see we've attempted to hold this area, and we actually broke it on Friday, right? It broke below on volume, and it bottoming tailed out. Now, what does that mean? Well, I think based on what I'm seeing here in the volume, I think we can go down and retest this 320 area. You'll see there's support here at 320 and also the rising moving average here on the weekly chart right around the same area. And I think we're going to have some good support in that area. So we could have further downside. Obviously, things could collapse and they could go much further, or things could turn around. This could be basically the shakeout here from Friday. Things could reverse and start going back up. Obviously, without a crystal ball, we don't know what's going to happen. But the charts are telling me that if it continues, if we can break the low from Friday, I think we'll revisit this 320 area. Okay, so that's what I'm watching for. Now, if we can reverse, oftentimes these shakeouts are just what we need with volume. You can see the volume picked up on Friday as well. It was also quad witching on Friday, so that typically jams up the volume a little bit too. That could be enough what we need to go ahead and quickly over the next week or two revisit this 355 area here on the Qs, or I'm sorry, on the SPYs. Okay, so right now, obviously the trend is still up. It looks like we break. We may have what I call a double tap setup where it triggers a long and then it shakes out again, and then the second long setup, which may happen here at the 320, is where you want to get back on the long side. And possibly short some things here. You might be able to ride out, $10 a share on the SPYs on the short side. In fact, let's talk about the Qs here real quick. And you'll see very similar, right? Pull back, attempt to go higher, try to go higher, break down below. But you'll see we're much closer to the support area here at around 260, and also the rising moving average at 260. And you see this cluster of 4 weeks of support here right around 260. So I wouldn't be surprised if we came down and tested this 260, maybe the high 250s, and held, and then that would be the time to get long. Or we get long immediately starting Monday if this thing starts to reverse off the shakeout below the support area here created at 270 over the last 3, 6, 7 trading days. Okay. Still in uptrends, like I said. If anything, err on the long side, not the short side, and we can look to try to take advantage of whatever happens here, what transpires. We got some earnings this week coming up too. I know Nike is one of the big ones to report this coming week, so keep an eye on that, especially if you own that stock. Let's look at the VIX. Someone was tweeting me about this and asking if it was time to buy this long. And actually, I said I'm watching it day to day. I think the opportunity to buy this long and ride it up. I rode this here, up here, sold 70% of my position on this pop, and still own 30% of the VIX. But I'm not adding to it yet. You'll see a double bottom possibly setting up here on the weekly and the daily chart. But we're still downtrending on the daily, right? In the weekly chart here, after this cataclysmic move up, when the market crashed in March, it's working its way back down. And it's got plenty of room. If it falls below this 23 area, I mean, this thing could fall quite a bit till it gets to this support area here on the weekly. So be careful. I'm still holding 30% of my original position here, and if it breaks below these lows, I'm probably going to sell it. But I'm watching to add back that position, especially if we get, like I talked about in the SPYs, we get another $10 move down to the support area. This thing could easily pop back up here to the 28 to 30 range, and definitely worth a ride. So I'm watching the VIX. I have no signal to buy more shares of this at this point, but I have a small position left off my original buy off this bottom here and this ride up off that. Pretty much I was playing this as a counter to the fact that the SPY was stupid extended here, and I just was anticipating this happening, and it actually panned out. So that's my take on the VIX. All right, let's talk about a few of the stock ideas. Something that's been doing really, really well. And first, let's start off with the cheap ones. I go through. I do find stuff typically under the $10 range for followers, clients, whatever, that really don't have a lot of money to invest. They want to buy the cheaper stocks are more in their wheelhouse. And some of these cheap stocks from a percentage basis you can make a killing on. So let's talk about the three I've been posting about on my videos. And if you've been following along, you've probably been making some money on these. Wrap Tech I've had for a while, been trading from way back earlier in 20. Okay, but rode this up, and as I said in my last videos, now the buy area here is right around $8 a share. You'll see this come down, bottom, double bottom, slightly lower low, right? Here's the weekly chart. First pullback after a steep move up. Steep back typically fails, and it did by a few pennies, right? But I was talking about, hey, in fact, I tweeted about it this last week. If it breaks 825-ish here, it's a buy. So I bought back in. I am in this thing, swing long. My stop is just below these lows. You'll see the rising 200 period average here at $7.09 a share. You can use that area as a stop, depending on what your plan is, or you can use these candlesticks, which is just around 750 per share as my stop. But I'm in this thing, full lot position. Looking to ride this thing back up. Now, where's my initial target? Well, obviously, you'll see if there's any trouble here at around the 950 mark on the daily chart. There was a little pivot there, but it's not much, more of a V-top. Should be able to break through that, but the concern is there's a cluster here at 10, a cluster here at 11. Okay, and then after we get back there, then you get the topping tails up here at 14. I'm in this for a long haul, and again, as long as the market holds up and doesn't collapse, I'm watching it. So, for example, what I'll do is if this thing gets up to, say, the $10 mark, and the market starts to fall through that support level like I talked about on the Qs and SPYs, if you go back in the video, then I'd be looking to take more off the table at 10 as opposed to letting it ride, if that makes sense. Okay, so it's a day by day adjusting based on what I'm seeing in the big picture on the small picture. But some of these smaller stocks, that's what's good about these. They're not, it's not like an Apple or a Tesla or a Facebook or Twitter. They can march to their own beat, meaning the market can start collapsing and these things could keep going up. So keep that in mind as well. So all this comes into assessment, but I'm looking at the $10 marks for my first lot, depending on what the market's doing. If the market starts humming along on all cylinders, I ain't selling anything at 10. I'm going to try to ride this thing up to these previous highs around at least $12 to $13 a share. So that's the first one. This one's been a killer. It's been awesome. In fact, I still have my support area where on a video I did a few weeks ago, I said buy this thing in the low fours. And it's gone from 4 to basically 560 here was the close on Friday. You'll see the aggressive moves up off this pullback off the 540 mark, just right back up. And like I said, the initial target on this, if you got in here with me, is around 590 to $6 a share. Now, if this thing bumps in the 580, again, with all these topping tails, depending on your appetite for risk, you might want to shave some off the table, okay? But the high fives is where my target is on this, and I'm not taking all my profits, so I'm going to be riding stuff. I think this thing is going to go past these highs. I think this thing is going to go past these highs, okay? And I said that twice because I'm feeling really good about that. However, I don't have a crystal ball. We could wake up and this thing could be at $1 a share tomorrow. So keep that in mind, okay? And I'm also going to guarantee you, even though I'm pretty sure this is going to go past this high, I'm selling some, taking some profits off this. I mean, basically, it's a 50% move from $4 to $6 a share, $2 over the last 2 months, month and a half. Not a bad. You got to ring the register on some of that, especially if the market starts to get a little bit iffy. All right. So Genesis, good on you guys if you got on this with me and followed. Like I said, you got my plan. I'm going to sell some in the high fives here, but I'm holding some beyond unless something markedly changes in the markets. Last one on the cheap. Now this one's a little bit more thin. I mean, the other two, Genesis it did about 300,000 shares on Friday, but it typically only does 100 to 150, I'm thinking, in general. Wrap Technologies definitely does a lot more volume on a consistent basis. This one, however, is very thin, making it very dangerous. Like, as I mentioned, even when I was suggesting Genesis, I said don't buy, a gazillion shares because you may get locked in on this thing and get trapped because the volume can be lighter. Although volume in general is picking up on Genesis, which again, that leads me to believe that I think there's more institutional type interest coming into stock. I think it's going to go higher. This one, not quite yet in that regard. Volumes are still very light. Like I said, if you're going to play in this thing, my suggestion is obviously follow your plan, but be careful on your share size because you can get trapped on this thing. But after this one big day here, you'll see it's just been consolidating. If you look, it's like a giant pennant, right? And look, the rising moving average on the weekly's coming up. The 200-day, it's holding. It blasted through it. It's holding that area. You got a solid stop here at about 320 a share. If you don't have a position in this, adding in the 350 range, 360 range makes sense. Now the chart is not pretty if you're a classic technical analyst with regards to charts. You got gaps, it's taily, it's whippy, but the bottom line is the big picture is this thing looks higher. When you get a big bar like this on volume and it can hold the area, I think this thing looks up. I own full lot in this thing, and I think this thing's going to go higher. So addable in the mid threes, stop in the low threes. Okay. Obviously, worst case stop here is around 260, maybe below this base after this breakout. But if it gets down to the 3 area, watch and see if that support holds. So know where your stop is, but you've got a rising moving average. You got to hold at the 200-day on the weekly. This thing looks sweet, handsome. It's going to move higher. All right, new cheapie in the mix, OIIM. I mean, if you follow charts, you look at this chart on the weekly, you should salivate a little bit. It looks like it wants to go higher. It's a lot cleaner than the window, right? Big volume up, holding the area. You got a double tap here, a lower low, jumped right back up like it torched nothing. Here, 308, 310. This is buyable Monday, right here on the high. It was actually buyable Friday. I didn't get it though. I'm not in this yet, but I'm looking to buy this Monday, depending on what happens. I like the idea. I like the stop versus the reward. I think obviously it's not worth it if you don't think it's going to go past this high. I think it's going to go higher. It looks like the infancy of a new uptrend on this thing. Rising moving averages across the board, crossovers, daily chart supports it. Looks nice, but obviously look, 50,000 total shares traded on Friday. So keep that in mind. All right, Goldie's been in these. I still own all these. I've had half positions in some cases, third positions in some cases, and full positions in some of these. I've been taking profits. I've been in gold for pretty much the whole year, riding it and making really good profits on it. And you'll see here, pretty much textbook, right? You got a flag here setting up on the gold on the weekly chart. I mean, your entry is really right over 185 a share, 185 with a stop at about 178, 177, right underneath this base here. Pretty cut and dried. All right, looks good. If you don't know gold, I'm looking to add to my position if it breaks above 185 this coming week. GDX. A lot of tails here, okay, and technically it broke above these highs on the weekly chart right here at around 43 and change, and it's getting pushed back a little bit. Okay, so keep that in mind. It's still valid. Watch it. If you're not in this yet, I would wait and make it break the last week's high. Don't try to get it front run it here at 42 or say, oh, it broke out and get in. I would watch it. Obviously, your stop's down here in the $38 range, but GDX is another one definitely worth watching. AEM. This one actually broke out of the base and got kicked right back in, okay? So again, if you took this, then you're in it and your stop is below 75, all right? But at this time, I would not, if you're not in it, I would not get in it right now. It's gotten pushed back here quite a bit. See what happens. We may get a shakeout. It may come back down. And so GLD may shake out, may break out under here, this 179 area. GDX may break down below its little support area at about 38 and change. All right, based on what I'm seeing on AEM, that's pretty ominous. That's a pretty ugly kickback off a breakout there, okay? But keep them on watch. Gold, another one here is kind of basing up here near the high. Same thing. It's getting pushed back a little bit, but watch it for breakouts above the high. Newmont's one I own. Same thing, right? Kind of flagging up here, support area. Lots of tails, lots of whippiness, but holding this range, looking for a breakout above 70. Stop down here at 62. All right, if it comes down there and it starts to break it, consider it. Watch. It's kind of like the VIX. See if there's a shakeout at that support area and it can hold. Okay, so watch Newmont as well. And what's the other one I own? Wheat and Precious Metals. Same setup, right? Just kind of hanging up here near the highs. So these are all worth watching. I'm in a lot of these, not all of them, and I'm not in full positions except for, I believe, in, what was it, Newmont. Newmont I'm in a full position in. All right, moving on to KTOS, which I had as a buy, and I'm in this. It broke out. I bought it. Beautiful setup. I even called it on Twitter, I believe. I posted it. It's breaking out today, buying it, and I'm in a full position long on this KTOS. I think it looks great. I think it looks higher. At a down day on Friday on volume, that's okay. Watch, see if that holds. Obviously, my stop is down here under this 1850, 1870 mark. So that's where my stop is. If it gets hit, it gets hit. If it doesn't, it doesn't. I'm going to ride it up, but I think this thing looks higher. KTOS, I'm in it, and at this point, the first retracement to the support area or to the breakout area is buyable typically. But again, look at the market. Is the market starting to collapse? Then you don't want to touch it, right? So keep that in mind. If it comes back there, I may add to my position if it comes down there, given what the general market is doing. But KTOS here broke out, looks good. I'm in it. Shopify is one I've talked about on and off. Beautiful. It's been so strong. And it finally pulled back here into look at this rising moving average. It hasn't been able to touch it, and finally it touched it on Friday. Actually Thursday it came down to 850. Very, very, very solid stock. Now you've got technically you could have gotten in Friday off this little island reversal, but if you didn't, I would play the weekly chart. Now granted, it's a pretty big stop, but again, buy whatever amount of shares makes sense if you get stopped out. But look for a breach above this high on the weekly chart of $953 a share with a stop under the lows, which is about $839 actually to be exact. So watching this first setup here on this first pullback to this rising moving average after this one. It's been quite some time since it's been up here. Shop's definitely worth watching as a long with a setup. MGM. I am in this long. I've been in it since this down here. Now it's setting up here. I'm looking to buy back some shares that I sold into on a breakout above these highs. You can see there's a kind of a base here. It's wide and whippy. Okay, you'll see it here. A bunch of dojis, right? Topping tails, but really $25 a share is going to be your break point. If it can get past there, I think the flat 200 period moving average or the $30 mark above would be your initial target. So MGM is definitely worth watching on the long side. I'm already in it long and looking to add to my position on a breakout. All right, last but not least here, Walmart. Really strong moves up here. I was fortunate enough to get it back in here and sold into the strength off this ridiculous move up here. Still own part of my position, and I'm looking to buy back that position I sold up here at around 150. You can see it's kind of oscillating here. Right, steep first pullback after a big move. Look at that. It hit and then it failed. Okay, and now we got the double tap happening here at a support area. Watch it for a setup. You can look at the weekly chart and say, okay, we got a lot of overlapping candles. It may take a week or two for this to kind of set up like it did here. See how nice and tight it is here? And you may not get that. So you can play the weekly chart, but I'm looking now, eyeing to buy back those shares at about $15 a share less than what I sold them for from that position that I originally bought. Okay, so Walmart here is worth watching on the long side. Keep a close eye on it. Pinterest actually is another one I wanted to share, and Lyft actually is the other one because we've been playing these. Pinterest here, beautiful. Is really kind of an expanding range, which isn't ideal, but you'll see it's tightening up. So any sort of slingshot above these highs here, this tail, is worth watching. I prefer not, if it, say for example on Monday, tomorrow, it just broke out above, I don't think I'd add to my position because the stop's too long. We don't have a setup. I don't have candles to work with here to tighten up my stop. I mean, technically I could say, okay, this pivot here on the daily chart at around 35.60-ish could be my stop and line in the sand for these any new shares. So if I wanted to do that, I could do that. But keep that in mind. What I'd rather see is it come up to 38 and base out, maybe give it 1 or 2, 3 weeks in that area, give you something to plan off of, and then bang it when it goes higher. Lyft is the last one I'll cover here today. Bought this long, as I mentioned on Twitter. It was this big reversal day here. Gave me the sign that I think this reversal was in. Okay, you got kind of a double bottom here, a retest of that support area, and it's popping up here. So $31 a share it broke. I'm in this long, and my stop obviously is below these lows. This topping tail, or I'm sorry, this bottoming tail here for one, and then obviously definitely pulling the ripcord if it breaks below this low on this bottoming tail here at around $25 a share. All right. All right, guys, trade well. It's been a great market for trading. Obviously, follow your plan. Take your stops, especially when we get another leg down here in the market, which is totally viable if it happens. Pull the ripcord on your trades. If you get your stop hit, don't ask any questions. Get out. Commissions are so cheap, if not non-existent nowadays. Get out. You're emotionally out of it, and reassess. You can always get back in. It doesn't cost you anything, right? It does not cost a thing at all, or maybe a few pennies to $1 or so. All right, trade well. Have a great week. I'll talk to you in the next video.